Time now for the call of the day. Telsey Advisory Group upgrading Target to outperform after that stellar second quarter earnings report. Shares are up more than 30% year to date. So, Pete, you own Target. You have for a long time. What do you do now?
I think you can still hold on to this stock. I actually think there's plenty of upside. When you really look at the multiple right now, Mel, and you look at what growth they actually showed, it's actually extremely cheap. At a 15 multiple right now, it's cheaper still than Walmart that had that big 10% move recently that trades at a higher PE level. And yet you look at the growth factors of what's going on right now. The $7 billion investment that Target has been willing to make, and Brian Cornell put his neck out there to do exactly what they're doing, and they're executing to absolute perfection, is they're growing in e-commerce. They've got the small model Targets that are going across the country, most of them on college campuses, and they're redoing many of the stores. They had a huge year last year doing this. They're going to continue this year and through next year. So there's a lot of work still to be done. But when you look at the foot traffic numbers and you hear how giddy he was yesterday about the consumer and how much people are willing to come in and how he's never seen a market quite like this, I don't think this is just a one quarter type thing. I think this is something that can continue on for the next few quarters at least, probably the next year or more.
The consumer is great, but what's fascinating is that there are real retail haves and have-nots. So, Brenda, where do you stand on retail? Do you own any of these sort of bricks and mortar, the ones that are competing against Amazon?
It's clear that, retail and the consumer are healthy right now. Obviously, we've had a lot of great reports out of brick and mortar retail. We do not have any exposure, however, to brick and mortar retail. When we look at investing, we manage a pretty concentrated portfolio, 30 to 40 names. We're looking for long-term themes that we can play. And when we look at how to play the consumer and retail, we're looking at, for example, just during the first 6 months of this year, e-commerce grew 15%. Meanwhile, brick and mortar grew 3%. Which is an acceleration from where it had been. So that's a positive. But nevertheless, we'd rather invest in that long-term theme. And e-commerce still represents, surprisingly, only 14% of total retail sales. So even though this has been a trend for a number of years, we think there's still a lot of growth to go. And we'd rather invest in companies that are really benefiting from that trend.
I focused on the last couple of years the hypermarkets, and I think the hypermarkets win in this scenario. I think you have to point out Costco, which I think is pressing towards $230 as we speak. Target, obviously, I think it was around this time last year, we had that conversation, Walmart or Target, and Pete correctly identified Target over the next year was going to outperform Walmart. Walmart still, to me, and it's something that I've owned, what's surprising about Walmart is there's been more volatility than I think traders and investors have been accustomed to in Walmart in years prior. You've actually been able to trade Walmart. Back in February, it was a $110 stock. It dropped to 80. So there's tradability in Walmart. It's what I'm focused on. Target's clearly been the winner over the last couple of years, that's for sure. But I think all of these names, Walmart, Costco, Target, because of their ability to spend and then see the e-commerce growth, I think right now that's where the focus in retail should be.
It's interesting because there's a convergence, right? And so when you're taking a look at these so-called bricks and mortar retailers who are doing well, whose stocks are actually doing okay at this point.
Some are doing well.
Some are doing well.
Yeah.
It's because of their e-commerce strategy.
Well, that's partly it, certainly with Target and certainly Walmart with the Jet acquisition. But there is also, in the winners in the brick and mortar space, there are some who are actually seeing increased foot traffic. Now, you mentioned the 3% growth. The disparity among the winners and losers is tremendous. And you can look at a Sears Holding, you can look at a JCPenney and just see, utter value destruction there. But with the Targets of the world and with the Walmarts and their foot traffic and the Kohl's of the world, you're actually seeing that there are still people who do want to go into the stores. Nobody can deny the move to online retail, but there are still people who want to shop in stores. But what I think is the most fascinating is in the online space. If we were talking about this a year ago, we're talking about Amazon as the absolute category killer, maybe Walmart and Target pulling up, number two. But you're starting to see a broadening here. You're seeing Nordstrom's, for instance, having a good digital presence. You're just seeing that it's more than Amazon. I think that's very interesting to see if that one category killer starts to distribute to other winners as well.
Yeah. By the way, let's add Best Buy to the names that I mentioned before, because, again, there's a company that's just done a fantastic
Well, it's a Minnesota-based company, once again. It makes a lot of sense. But, I mean, the reality is...
While we point out your love for Minnesota, let's point out that Brian Cornell, your favorite CEO, grew up 10 miles away from me in Queens.
Don't hold that against him. Don't hold that against him. Don't hold it against him. No, there's very little effect from that. But the reality is, what we're seeing right now, Mel, is whether they're in any city or any state in the country or whatever, it's interesting to see who's actually successful. Best Buy, Joe points out. We've been pointing that out for a long time. It seems to go to new highs almost every couple of months, we see another new high out of Best Buy, pulls back a little bit and goes higher. That was supposed to be left for dead. Then we had the grocery space. They were left for dead. Everybody started selling those. Keep an eye on the the drug dispenser, like the Walgreens of the world, CVS's of the world, because as soon as that was a move towards PillPack, I believe was the move that they made in Amazon. Oh boy, did they sell those off. And where are they now? Most of those are they're either higher or much higher than they were before that. And why? Because the overreaction effect that Amazon's going to put everybody out of business. I don't think that's the case. You just have to make your business better and get people the foot traffic, whether that's Target or Walmart, whomever. You got to get the foot traffic in, and it starts with the e-commerce.
That's a great point, because if you think about the Amazon disruption, we were told that Amazon was going to disrupt everything. And Best Buy Rabbit is the evidence. When you look at those bigger ticket items, Amazon really was not able to disrupt that. People still
People had the muscle memory of the Barnes & Noble. What happened with that? Right? I mean, Amazon came in, changed the book, and so they just assumed that Amazon would be able to do that for all sorts of businesses, every single business that it entered. And it did put margin pressure on a lot of the businesses. We have to admit that. But to say that they have actually put I mean, we've seen with this retail renaissance that is actually not quite true. That bricks and mortar can coexist.
It's still about efficiencies, and it's still about...
It's true, because the guys at the scale and size, they're competing well against Amazon.
Inventories, there's all the different factors that go into who's really winning and who's really losing.
Do you think product matters, though?
Yes. Oh, absolutely.
Right. And that's, again,
but
here's why
it's what product that you choose to have in that store, too. I mean, on top of all that, I mean, think of Target right now. You've got 5 different segments that people, when they go to Target, they go. Now, I can tell you this for an absolute fact. This is something that Brian Cornell taught me very early. He said, look, he goes, when you're looking at the grocery space, everybody compares us to Walgreens or Walmart. They should not be doing that. That's a much larger 50+% of what they take in is coming on the grocery side. Right. Meanwhile, at Target, it's 20%. So you have to keep that in mind as well.
The last word.
Yeah, we think obviously that, brick and mortar and online retail can absolutely coexist. And there's going to be winners, especially on the brick and mortar side, where they have a differentiated reason to go into the store to actually see something physically or to have a shopping experience, like we were seeing in off-price, for example, that you can't get online. But nevertheless, when we look at where to put money to work, we would rather invest in businesses that are going to grow for the next 5 years, rather than within brick and mortar. A lot of times, so often it feels like it's a market share game because you don't have that growth at your back that you would have on the online side.
Sales per square foot is what matters the most in brick and mortar. So if you're Best Buy and you're selling laptop computers for $1,000 a pop, that's much better than the same volume selling 10 packs of socks for $5.